if you sit on an HOA or condo board, there are three mistakes that I see over and over again as a CPA and auditor. Today, and these mistakes lead to a lot of issues, right, Carla? Especially special assessments, DBPR issues, legal problems, even personal liability by the board members sometimes.
That's right. Sometimes reserves accounts not funded correctly or enough. There's a lot of different things that we see.
Yes, we see them over and over again. In fact, today we have the pleasure of coming to one of our HOA clients. As you can see, we're sitting on a beautiful pool today, and we wanted to talk about the three main issues that we see by HOA boards and how they lead to all these mistakes. That the good news, all these mistakes can be avoidable, right? Just by following some simple guidelines, so many headaches that you're gonna be able to avoid.
Right, and not knowing something is really not an excuse for not being compliant, right?
Correct.
Especially with the new regulations that came out this year in the state of Florida.
That's right. So that leads us to our first mistake. Okay, mistake number one: treating financial reporting in audits as optional. Okay, are these optionals? No, definitely not.
You need to know your thresholds.
That's right. So as HOAs, as Carla mentioned, there are certain thresholds that lead you to whether you need to do an audit, a review, or a compilation. But the bottom line is you have to comply with the financial reporting by the new HOA rules. Okay? On the Florida law, HOAs are required now annually. Very important. This is not a one-time, once I do it and I'm done. It's an annual audit or compilation or review that needs to be performed by a certified public accountant.
Right, and it's not only about being compliant, following the rules, make sure that you meet all the requirements. It's to give your homeowners a peace of mind, making sure that they have right financials, that they have audited financial statements, that they can trust their board with their money.
That's right. And it's why they have these requirements, right? HOAs are responsible for managing money that doesn't belong to them.
Exactly.
And as part of these regulations, what they're trying to accomplish is to make sure that this money is being used correctly, right? We've seen too many issues with misplacement of funds, hidden funds, misappropriations, theft.
Right.
And at the end of the day, it was too broad. And I think what this is trying to do is to avoid those as much as possible.
And to gain the trust of the homeowners.
That's right. So, is it optional? No. So, let's talk about some of the revenue thresholds that we talked about, right? So the first one is if your HOA receives in revenue less than $150,000, you're supposed to report the receipts and expenditures report. Okay, that's the minimum, right? So what are you doing there? You're at least categorizing and showing what your income and your expenses are, right? At the bare minimum, okay? So it doesn't require an audit, but at least it requires you to have at least a minimum compliant with the financial reports that you're working on. And important is to keep track of those receipts and make sure that those expenses are allocated, right? And they're categorized correctly.
Right, and that you have the support for every expense, for everything that you have used that money for. You have to have support for all of the transactions.
Absolutely. So what happens if the revenue is over $150,000? In that case, if it's between $150,000 to $299,000, you're supposed to have a compiled statement. Okay? What is a compilation, Carla? Compilation is you have to, at the bare minimum, create the financial statements, right? Which is normally a balance sheet,
a profit and loss, statement of cash flows, and usually sometimes the statement of capital, right? Depending on the type of compilation that you want to do. But
that's at the bare minimum, set up the financial statements, right?
Right.
So just to give you some background into the difference between a compilation, a review, and an audit, the audit is the highest standard of assurance that you can provide, right? An auditor is going to do the most amount of work to be able to say and give an opinion that the financial statements are free from error,
Right.
right?
It's definitely the most expensive
Yes.
of the three.
Yeah.
That's for sure.
Yes.
But it will give you the clarity that you need and all supported by a CPA.
Yeah. And it's the one that keeps us up at night sometimes
Exactly.
too, right? With
Exactly.
all the amount of work that we have to get through. And basically what we're doing is we're giving our stamp that these financials really say what the reality is,
Exactly.
right? Because financial statement can be telling a story, and it could be
Yeah.
a wrong story, right? A very
The wrong movie.
a very made up story. So really, what we do is we put a stamp and we say, okay, these statements are correct to the highest standard that we can say, because nothing is 100% proven.
Yeah.
But we do give that peace of mind and that that qualification that it's that it's for the financial statements.
And it's definitely important to point out that auditors are completely independent from the board or from the person that is working on the accounting for the HOA.
Absolutely.
So it's 100% independent.
Absolutely.
That's good
That's a good point. Yes. So obviously, what we're trying to accomplish there is to say, we're not part of. We didn't create this. What we're doing is we're independent. We're coming in from an outside perspective, looking at what was done
Right.
to verify that it was done correctly.
Correct.
But we don't do. What that independence does is we don't do the accounting. We don't do the basically the groundwork, because you can't audit yourself, right?
Exactly.
It's kind of missing the point there. So what happens, Carla, if it's between 300,000 and 499,000?
Then you need review statements.
That's right. So if we follow the standards, the highest standard is the audit. Below that is the review, and at the bottom is the compilation. It doesn't mean that one is less important than the other. It's just the amount of assurance that is provided, right? The audit is the highest level of assurance, and obviously as the income threshold or as the income amount gets higher,
Right.
the amount of potential issues increases, right?
Right.
And that's why the higher the income, the higher the assurance that needs to be provided.
Exactly. And just to make sure, if you have revenue over $500,000, you definitely need audited financial statements. At that range, that's exactly what you need. Audited financial statements. It's not a review, it's not a compilation. Just to be clear on that part.
Absolutely. Yeah, you don't have to do all three. Yeah.
Exactly.
Yeah, you just kind of go, and that's what we're here for, right? One of the areas that we offer and that we service is provide this level of details to our client, to our potential HOA board members, to ask us and to review the financials to ensure which one do they fall under.
Yes, and sometimes just think that if your insurance company, for example, it might be something that they require on their end before giving you the insurance. So you might have a vendor that will require one of these three items that we're talking about today.
Absolutely, absolutely, and we see that over and over again, right? Sometimes it even happens when you need when an HOA needs capital, right? It may need to go through through a financial statement processing with a lender,
Exactly.
with a mortgage broker, something to that extent, and then they need to provide a qualified financial statements, whether it's a compilation, a review, or an audit, to make sure that that an auditor has reviewed those financial statements.
Right.
So, okay, so it's between 400 and in about $500,000 of revenue. That's when the big boy comes in.
Exactly.
That's when the audit is required by the HOA. So normally what happens is you can scale up, right? You could be under that $300,000 threshold, but you could say, I actually prefer to be audited then reviewed, but you can't come down, right? What that means is if you're over $500,000, you can't say that you're gonna need a compilation. So that's important, okay? So what are some of the things that we see, Carla, by board members? Because this is sort of a recently created rule, right? We see more and more HOAs calling our offices, inquiring about the new law and whether they need to, what do they need to do to comply, right? And so some of the issues we see is some of the main questions are, for example, I don't know when I've crossed that threshold.
Right.
That's number one, right? I think that an audit, a review is the same.
Right.
I just give me the cheapest. I don't want to spend. I didn't put it on the budget. We hear this a lot, right? And is that an excuse?
No.
It's no excuse. You still have to comply with the law, whether you put it on the budget or not.
Just like you put your Christmas decorations in the budget.
Exactly.
This needs to be part of your budget as well.
Absolutely. So some of the key ones that we see too is some of them call us and say, well, I have a management company, so they must be handling that.
Right.
So is that really the case? Probably not. An audit and these financial statements is completely separate, and then there's also that independence issue that we talked about, that you're gonna have by a management company. They by nature cannot be audited in your financial statements. Obviously, they're gonna be able to assist you in generating the information and the data to put the financial statements together, but they don't replace the auditor.
Right. They don't replace a CPA firm doing the actual audited financial statements, the compilation, or the review. Your management company might be guiding you and giving you advice, but it's not necessarily their responsibility. It's the board's responsibility to make sure that this is getting done. Absolutely. So at the end of the day, when we do an audit, we're not checking a checkbox, right? We're not saying, we're actually providing evidence that the owners are getting the right information in front of them. And timely.
And timely, exactly, and timely. And this is especially true for HOAs that we see, right, that they go through special projects, right? They have special assessments. So those become even more of a target, if you want to call it that, to mistakes and issues. And that's why an audit is very important. It also provides one of the main reasons that I find is that, when you talked about an audit, once you mention an audit in an HOA board, things seem to change, right?
Yeah.
There seems to be a drift in the mindset where we need to make sure now we need to make sure that we're doing things correctly.
Yeah, and a lot of people sometimes think the word audit and they already think, oh, somebody must be mismanaging my money. And that's not necessarily true. Sometimes it is. It depends on the findings of the audit.
Yes.
But an audit is reassurance.
Yes, right. Absolutely. So as part of the audit, we do kind of find some things sometimes, right?
Right.
But our intention is not to, point fingers or
catch somebody stealing.
Catch somebody. It does pop up sometimes that you don't want. But it also forces the HOA to make sure that, because what we see sometimes is that the HOAs, because of the nature of how sometimes they're formed, they think that some of these things are optionals, or that the rules, you don't have to stick to so many rules, right? And this is when sometimes misappropriation of funds happen, but it's by misunderstandings. Right.
Exactly.
So one of the things that we kind of work through is make sure the bylaws are completed, and if they're not, we actually provide advice, how to complete those.
Right.
But at the end of the day, we go back to that assurance that you mentioned.
Right.
Right.
And do you live in a community that has a homeowner association?
I do.
Me too.
There you
we
go.
live in Florida.
Yes.
So.
Yes. So.
Do you like to look at the financial statements?
You know what? I don't look at them enough, but it's something that it's definitely recommended.
Right.
And especially in my HOA, it's a huge HOA with multiple. It has like over 1,000 units.
Right.
And we're actually going, and this is important to note because like it's a fairly new HOA, and with fairly new HOAs, there's a lot of work that goes into the first audit. And unfortunately, for independence issues as well, I can't be the auditor of my own HOA, but I do work with the board members who have asked me for advice and have kind of worked through some of those key issues with the bylaws to make sure that we're compliant on certain things.
Oh wow. Okay.
So, but obviously, you know, it's another level, and I'm glad that you asked that because there could be different stages of an HOA, right?
Yeah.
It could be in my case, it's a brand new, huge HOA. So you kind of have a perfect storm there of issues and potential problems that can happen. I even have, because it's what happens is in new constructions, once they get hand over to the owners, that's when some of these things start coming up. I'm sure you lived through that
exactly.
as well, right? And
we have seen it.
Yeah, and that's when the budgets start changing. That's when people start asking questions.
That's when the fees start
absolutely
going up.
Absolutely. So I think at the end of the day, what we it's good to get involved in your HOA.
Yeah.
You know, from our perspective, we're auditors, so we know what's going on from that side of the HOA. But it's important to also get involved.
Exactly.
You know, as someone that lives there and that wants things to work and wants to make sure that there's an internal process for payments, for vendors, and make sure that their money is being used properly.
Yeah, so like I said, as business owners ourselves in a community that has a homeowners association, we know and we feel what you are going through, the importance of having financial statements done correctly, to have them presented to your homeowners, and that you know for sure that they are definitely going through all the compliance prospects of the requirements for the state.
Absolutely. So Carla, how do we avoid these mistakes? Okay, so let's start with the first one, right? So the first thing is we need to verify the HOA's annual revenue, right? So we kind of went through that a little bit, right? And so how do we do that? We need to work with who's managing the accounting, right? We need to have, that's the first thing, right? There needs to be some sort of accounting help. Normally someone on our HOA that's a volunteer,
Right.
Sometimes it's not the best case, but at least we gotta have something.
Right.
Right? We need to have some sort of accounting process in place. So we mentioned a management company. Right. Some management companies offer the full service. Sometimes they're done in-house, right? Whatever.
Sometimes there's HOAs that are self-managed.
Correct.
That they don't have a management company.
Correct, and we've seen those too,
We've
right?
seen those as well.
I mean, there's obviously a fee associated with hiring a management company.
Correct.
We do see some benefits. We worked with very closely with HOAs that have made that change, right?
Exactly.
From management companies to self-managed, and we've seen some of those struggles, right? Doesn't
Especially
mean
if they do it in the middle of the year, but that's another video
exactly
that we can talk about.
Yeah, it doesn't mean that it doesn't make sense sometimes, but I think it's important for people to know what they're getting themselves into prior to kind of pulling the trigger in something like that, right?
Exactly.
Because one thing that can be missed at times is the amount of work that goes into these HOAs.
Into managing
Correct.
an HOA.
Correct. There are multiple things that you may not be aware of that as an HOA you need to be compliant, you need to be on top of. So, you know, it's make sure you have the time. Right. So that's the one question for someone that is looking to make that change. But so we have that. What's our advice? What's the step number 2? how to avoid these things. Besides having a management company, we recommend a licensed CPA to do a checkup,
Yes.
to verify the books and give you that, just sort of, make you that clean, make sure that the books are clean enough to give you at least a threshold amount that you're working with to make that determination.
Right.
It doesn't hurt to have somebody, a professional, to have a second set of eyes on these things, right? And why do we recommend licensed CPAs? It's obviously not a requirement, but those are the professionals that are usually constantly working on this type of engagements, and then can provide you more of a clear picture of what's going on.
Right, and have the experience.
Very important. So there are preparers and accountants that can assist you with that as well.
Right.
But we recommend a higher level, especially maybe the first time. If you're self-managed or whether you have a management company, have that peace of mind that we see a lot of HOAs that are in need of, right? To have that level of standard with their bookings. Number 3 is, we mentioned this. So how do we avoid this? Go up. Go up in the level of assurance. So if you're in an HOA and you're considering, I'm within this threshold, technically I'm supposed to be here. It doesn't hurt to start with an audit, because that's going to give you the highest level of assurance.
Right.
And I think what we find in our practice is that it goes beyond just having clean financials. It also gives that level of commitment by the board to their members, right? We just had one example recently where one of the HOAs, they came in, they put it like this. We're required to do a compilation, but we did an audit. That's how we commit to this HOA.
Exactly.
And it resonated with the owners.
Exactly.
Right. So that's another thing that we find to avoid it. So to give like a broader picture, what I want to say is there can never be enough importance into the accounting, the internal controls and the independence by all parties, all shareholders, in order to get this process to be clean, clear, efficient, effective, and that it works for everyone.
Exactly.
Right? Yeah. So that leads us into mistake number 2. Mistake number 2 is weak internal controls and lack of transparency. Ooh.
What is lack of transparency?
Well, I mean, the name says it, right? I think it's pretty self-explanatory. And it's
not providing the financial statements
correct
to the homeowners, for example.
Exactly. And one important one that we see is acting shady, right? Not answering the questions.
Right.
We can give you a ton of examples of, bad, of badly run operations, where it creates an environment of distrust.
Right.
Right. The members, the owners don't trust the board. The board, tries to kind of, clean some issues as they go. And all of this creates a whole, it just basically perpetuates the problem. Right? It just creates a spiral that seems to have no end. So to answer your question, transparency is a clear line of communication, open books, have board members that are really looking for the benefit of the HOA and act accordingly.
Exactly.
Right? Talking specifically speaking, what are we looking at? Well, like for example, you asked me, Carla, how does my board become transparent? Number one is bank access, right? If you're at a board where there's only one person having access to the bank, that could be a problem, right? Number two, check signing. That's one that we see quite often, right? There should be an internal level of process of who signs the check, that there's a review of the vendors or whatever the checks, what the purpose of the checks. There needs to be a clear purpose there.
Right, and that's part of the internal controls, right?
Correct.
Make sure that it's documented on who is doing what and when.
Absolutely. And then reconciliations, right?
Right.
For us, as accountants, a bank reconciliation, it's 101, right? It's the air we breathe.
Right.
We can't ever talk about clean books. What's our first step when we talk about clean books?
Make sure the accounts are reconciled.
Correct. A bank reconciliation, right? We can see a very pretty balance sheet in profit and loss.
But where is the support?
Where is the support? What happens if we see a very pretty balance sheet, but there is no bank reconciliation?
Exactly.
Can you trust the numbers?
No.
You cannot trust the numbers. So that's at the very basic, access to the information, right? Another one important is reserves and operating in the operation of funds, right? And that they need to be separated, right? There needs to be a clear line of responsibilities, that there is enough segregation of duties, so that there is no one person in charge of everything. And there needs to be a back and forth, right? There needs to be approval for vendors. There needs to be approval for checks. There needs to be approval for funds, to be distributed how and that they follow the guidelines, right?
And accesses to the system, correct?
Absolutely.
Not everybody will have the same access to the system. Like if you are, for just an example, creating the vendor, that doesn't mean that you're going to be the one also paying this vendor. And that's part of the checks and balances and the segregation of duties. It needs to be done on the systems as well. Absolutely.
So a big one that we see, Carla, is what happens in terms of transparency. What happens if I'm a board member and I ask my board to provide me with an invoice and they say I don't have an invoice?
That's already a red flag.
A red flag, right? And for us as auditors, that creates a problem, right?
Exactly.
So incomplete and outdated records, it's one of those issues. So it's making sure that those things don't happen, but it's also that the owners have access to the information as well, right? That doesn't mean that if I call my board right now and I say, give me a profit and loss at this moment, that they're just gonna hand it out to me, right? But one of the things that as accountants that we do is we give a certain time for updating the books, right? So just to give you an example, on September 15th, we can't ask for a complete 15th for a complete September financial statements, right? It hasn't gone, or on October 1st, it's unrealistic that in one day you're gonna settle down all the previous month, right? So there needs to be also a communication in terms of not only the owners having access to the information, but that there is also a reasonable time that this information gets provided. So the bottom line is having a clear line of communication, having
internal controls,
having transparency, it's the foundation,
Right.
right? It's a foundation for these things. So
And if you are an HOA that wants to make sure that these items already are happening in your homeowners association, then you should have audited financial statements.
that's right. That's right. Yeah. So if you're unsure, our recommendation is, at the very minimum, call a CPA
Right.
to give you that rundown of the financials, to work you through your internal processes, and verify that you need an audit.
Right.
Yeah, that's very important, and we see that in our HOAs.
Right.
So that leads us to number 3, Carla. What's number 3? Number 3 is kicking the can on reserves and long-term planning. Right? Huge
That
one.
sounds like a lot.
That sounds like a lot.
It is a lot.
And unfortunately, it happens more on those, let's see, inexperienced HOAs, right? Because think of an HOA process as a marathon, right? It's not a sprint. The whole reason to having an HOA is so that things are run properly, right? And something's gonna happen, right? And that's why you have the HOA.
Right.
If there is no HOA, for example, there's obviously some there's some traits there in terms of freedom, right? I mean, no one is tied to any set of rules. Pretty much any owner can do what they want. Maybe there is some value there to maybe, let's say, certain people.
Yeah.
But if we want to make sure that the area that we live in kind of has a standard, then that's why an HOA comes in. And part of having that standard, when we talk about reserves and long-term planning, is you need to have some money for the rainy
Save.
days, right? Save.
Yeah, and not for something that will happen tomorrow, for something that can
Right.
happen in 10 years.
Absolutely.
Maintenance, pool maintenance, roofs. There's a lot of things a lot of components that you have to have clear, and that's part of the planning, right? Because you don't know, there's certain things that you already know today that you will have to fix in 7 to 10 years.
Absolutely.
And you have to make sure that you
Yeah.
have the money when that time comes.
Right. And we live in Florida, for example, right? What happens in Florida?
Hurricanes.
Hurricanes, hurricane season, right? What happens if during hurricane season there's issues with the community pool, right? Where
Right.
we're at right now. What happens if the light falls down? What happens if some of the houses, that's more of an insurance issue. But what happens if the hurricane kind of drops the level of standard
Right.
in our community, right? That's where the HOA comes in, and that's why that reserve and long-term planning really comes in, right? And then for us as auditors, we want to make sure that long-term planning, that reserve, is being allocated and managed properly,
Correct.
right? It's one of the things that we do in the audit.
Right.
But I think,
Yeah, what happens, for example, when you have underfunded your reserves account?
it's a problem, right? Because that's
That's when
the
special assessments come
special assessment.
that nobody wants to see.
I haven't seen the first person that's happy to get a letter saying we need a special
Right.
assessment, right? And that's the issue with surprises, right?
Exactly.
And it's a very unpleasant surprise. And let's be honest, right? We all have our lives, we all have our bills to pay,
Right.
we all have our
budget.
budgets, right?
Our personal budget.
Exactly. So it's really, it can be a problem that your HOA just says, hey, by the way, this happened, we did not prepare for it,
Right.
but I need you to now, whatever plans you had,
Yeah.
whether it's really going to make an impact or not, because at times it can be impactful.
Right.
But there could even be a lawsuit, right? We've seen that.
Yes.
Something, there could be an accident that happens in the HOA. And
Right.
that's when we're talking about some of those big assessments.
Right. And one of the items that we look at during the audit is to making sure that there's a segregation, right, between the two, between what is a reserved account and what is an operating account.
Correct.
So that's part of what we do
Correct.
as well.
And there's a study. There's gotta be a process on how you come up with that. It's not a number you just get off your head, right? There is some study there. There's some. There's basically some projections, some analysis.
Yeah.
We talked about being in Florida. There are hurricanes, so you kind of input that into your budget, right?
Right. And that takes us back to mistake number 2 is the lack of planning.
Correct.
If you don't plan for things like this to happen, then those are when the surprises come up.
Absolutely, absolutely. And then, you could say, Carla, right? Okay, so what happens to my reserve account if I don't use it? Do I just get the money back? Well, just because something didn't happen this year doesn't mean that it's not going to happen next year. So it's definitely not a fund that you're going to put there use it or lose it.
Yes.
It's something that you can just kind of plan ahead and make sure that whatever the use is makes sense and it follows the right path into what the decision goes into, what a reserve is and what it would be used for. I mean, obviously all HOAs are, most HOAs are different. They're not all the same.
Yeah.
There are some priorities in some than others. There's also condos, which are a little bit different, right?
Yes.
With the issue that happened in Miami with when one of those buildings collapsed, there's been added regulations into condos. So there's another area there of nuances into what a board needs to make sure that it's compliant for their owners.
Yeah. So one of the recommendations that we do is to have the HOA do a reserve audit to make sure your reserve account is correct and it is where it needs to be, basically.
Absolutely. So
Reserve study. Sorry, I said reserve audit. The reserve study.
Absolutely. So I think we're gonna wrap this up. I hope that you find this video to be of useful to you. We are Upfront CPA. We're always open for questions. We offer discovery calls. We talk to our clients. Have a conversation with us and see if we can help you. Today the wind didn't really help us today, but we wanted to make this video in the open. We're in Florida. We came to visit one of the HOAs, and that's one of the values that we offer, right? We visit our clients. We meet face to face, and we shake hands personally. And we give that personal touch, right? We're not the old-fashioned accountant that you hopefully maybe gonna see, one day, or you just communicate via email if you're lucky. We're out here.
Yeah, for sure. If you have any questions regarding what we spoke about during this video, just go to our website and you can schedule a discovery call with us and we can answer any questions that you may have. If you're still thinking, do I need an audit? Do I need a compilation? If you're not 100% sure, give us a call and we'll be more than glad to assist you.
If you like this video, please click the like button and follow us for more content.